You know, Neil, in these uncertain times, it's great to quote the greatest investor of all time, the Oracle of Omaha, Warren Buffett, who says that in these times, he advises investors to be greedy when people are fearful, fearful when people are greedy. And when Warren Buffett sells off half of his Apple stake, capping his 800% gains, selling off about $80 billion in stock and cashing up to $277 billion. That tells you that there's been a recent market peak. Now, if you look overall and reframe it, you're still up on the year. The NASDAQ's still higher, so is the NASDAQ 100. Even the AI darling NVIDIA, you've essentially doubled your money this year, despite the 30% declines that you've seen over the past month. But investors tell me that right now, this is about hedging against the downside, some repositioning taking place with a lot of uncertainties out there, whether it's over the election in November, whether it's over the Japan unwind, or geopolitics, as you mentioned, with Iran, Israel, and the impact on global oil prices and commodities.
You know, Susan, what's wild about this is what brought it on. And it was an employment report that on the surface did show job gains, not losses, 114,000 more jobs. But clearly the market was expecting more. That's very different than the meltdown we had in the 2008 period, where, of course, on months we would sometimes lose close to 1 million jobs in a month. So what has got them thinking that this is the end of the world? Is it just that it disappointed to the degree it did, or that it took in a lot of other players?
Yeah, I would characterize it as more fear than, say, panic, because, as you mentioned, it wasn't really the jobs number at 114,000. It was the jobless rate, which went up to 4.3% and exceeded the Fed's own expectations for the end of this year. So the concern is the Federal Reserve behind the curve? They were too late in raising interest rates. Are they too late in cutting interest rates once again? Now, you've heard people calling for an emergency rate cut, which I think would actually send a panic signal to the markets. But also, you have to couple it with what's happening around the rest of the world. As I mentioned to you, the Japan unwind, the fact that Japan in this so-called carry trade, we're talking about $20 trillion worth of cash. That's essentially the U.S. economy right there. And this carry trade is where investors over the last few years have borrowed in cheap yen at virtually zero rates, so essentially free money, and using that $20 trillion to invest elsewhere, including right here in U.S. borders. So the fact that now interest rates are going up in Japan because you have inflation for the first time in 4 decades there, that means a lot of this cash has to come out from somewhere. And a lot of that is coming out of U.S. stocks right now and people selling. Also, the uncertainty of the trajectory of where the Federal Reserve will go, and also the growth scares around the world. But I'll note this, Neil, back in 2008, I was actually covering the Japanese markets, which came off its worst session since 1987 last night. And things are a lot better now fundamentally than they were back then during the global financial crisis, because back then you weren't even sure that the global financial system would exist in a few days. This time around, at least there's some dry powder, especially from the Federal Reserve and also the Bank of Japan.
Well put, Susan Lee. Thank you very much for following that at the NASDAQ market site, of course.